Welcome to Childcare Conversations with Kate and Carrie.
Welcome back. We are so glad that you guys are joining us today. We are excited to, talk about probably one of our least favorite subjects, but it is one of those things that everybody in early child care needs, everybody in small business needs. And so we're going to have a conversation about insurance, which Carrie calls legalized gambling. And
Yes.
because we really hope that you never actually have to use it. So Blake with A Leaf Insurance is joining us today. And so, Carrie, I'm going to actually toss this to you because I know how much you just have loved using your insurance in the last 30 years. And so, do you want to tell us a little reason, maybe why they need to make sure they have a specific kind? And then we can have Blake tell us an update on the state of insurance and early child care.
Well, I think the one that Kate is referring to is when I bought two centers, I did not put business interruption insurance on the new schools because I'd never needed it before. And I had some background and I was like, this doesn't seem relevant to a downtown childcare center. I don't see the reason for this. And we had one of those big fun Texas thunderstorms, and there were 3 live oaks on the property. One of which dropped a limb the size of a football player's leg, like that thick around, onto the roof of the building. And the landlord, and it, broke the roof, and the landlord wouldn't get it fixed because she said, I'll just wait for the next time you have a 3-day weekend, because I would have to pay you for any days you were closed. So we're putting a tarp on it. In the rainy
How did that go,
season.
Carrie? How did that tarp work out for you?
Black mold is how that worked out. And so I ended up severing my lease with that landlord and leaving because that didn't work out for me. And if I'd had the business interruption insurance, the landlord said that they would have done it, because then my insurance would have paid me instead of the landlord paying me. But it was the landlord's responsibility, so I still don't think I should have had to have it.
Carrie, there's a lot of people, though, that I would say thought like you. They thought since they didn't own the building, there was probably no need for that. And like you got to experience the bad side of it, you need it.
Yep.
It's not that awful expensive. But even a lot of insurance agents out there don't quite understand the business interruption side. If you don't own the building, they don't realize the amount of bills you still have to operate, mainly being payroll. I mean, that's the main one that you want them to keep paying because it's not going to be able to come out of your pocket.
Well, we're in that time of year. Carrie and I literally just got back from Oklahoma, and we literally missed all the Oklahoma City tornadoes by literally hours. And so, I'm sitting here reaching out to our clients in Oklahoma, and all I kept thinking to myself was, I wonder if they've listened to that episode. Do they have business interruption insurance? And so let's just start real quick, Blake, with what is business interruption insurance? And when you say it's not very expensive, can you ballpark it any way? Like, per head?
Is that $100,000 worth of not very expensive, or is that $3,000 worth of not very expensive, or 300?
So that's and it's really weird. Over probably said the last, I don't know, year to 2 years. It's really changed on the amount of coverage. So used to, it was always pretty standard with most companies. You would see on your policy the letters ALS. That just stood for actual loss sustained. So, Carrie, your school could have been closed for a month. That's a different dollar figure than, let's say, Kate's got a school and it had to close for 6. two completely different dollar figures, but again, actual loss sustained kept that big umbrella. It might have cost, they might have paid out 75,000 to you. Kate could have gotten 250,000. Now, what we're seeing, a lot of companies are coming on and trying to put a stop limit on it, whether it be, I've seen some as low as 75,000. More common add-ons have been about that 350,000, but then there are still a couple companies out there that will do actual loss sustained. So to get that big number, no, I still think, like you said, Carrie, we're probably talking about close to that $3,000 mark. But at the end of the day, if something were to happen, you spent 3,000 over a year and it paid you out 300, 400, 600,000, depending on the extent of damage and how long it took you to get back in, it was well worth it. And some actually come with an extended coverage. So like you said, I've got, let's just put numbers out there, 4,000 square feet in my building. I've got X amount of children. Well, that business interruption can pay to rent you a similar space down the street and keep your students enrolled. And that's a big key. You don't want to lose your teachers. You don't want to lose your students going through whether it's a full-blown reconstruction, because something like Oklahoma's seeing, a lot of tornadoes, the damage, or just your roof blowing off. I mean, realistically, to get a restoration company in there, probably going to be some sheetrock damage. You're going to have to get some contractors in. We're going to get a new roof. You're talking a couple months before you probably can even get back in. And that's if they get on top of it right when it happens. It's still going to take time. Absolutely. But there's typically a 72-hour waiting period. Once you hit that 72-hour mark, you're good to go.
So I'm doing the math in my head and I'm like, okay, so even for somebody who's been in the business for 20 years, even if they paid their $3,000 a year and they only ever had to use it once, that's still, even if you lowballed it and you had the $75,000, you still ended up in the positive part. Mm-hmm. Even for those who run businesses who are really efficient at saving money and having their rainy day fund, it sounds like this is just kind of a, I don't want to say it's a no-brainer, but it's a no-brainer. So,
well, I think it's definitely a no-brainer if you're in tornado country, wildfire country, hurricane country, any of those kinds of things without
almost the entire U.S.
I was like going, so where are you not in one of those, Carrie? Because we got Bastrop burning. We got Oklahoma blowing away. We got,
I don't know.
The southeast coast kind of
maybe Las Cruces, New Mexico.
For the last year have been under crazy wildfires, and like the Ruidoso area has gotten so bad with the wildfires. Then the rain came and it just washed all the black ash and mud all through the city and still caused damage.
Yeah, so I was like going, we're thinking we don't have issues.
Yep.
Maybe some of those Midwest states, maybe Iowa. I don't know. North of Tornado Alley, but yet not Midwest, not up by the Great Lakes, because, they get crazy snow. So, mm-hmm. Well, with that, Blake, Carrie, thank you for sharing that story. But Blake, talk to us a little bit about, we're seeing, partially because we're probably on every blog, podcast, news subscription service specifically related to early child care. So we know that this is a huge conversation really everywhere. But for those who are listening, what are things that have changed that they may not have realized? What are your words of advice, and what can they do now to arm themselves, even if we're talking 6 months down the road is when their renewal is?
That's when they got to start
when they're wanting to open their next location.
Or the next location.
Oops.
Yeah, so time is the big thing right now. I think everybody's getting themselves in trouble they're hearing all these things from different podcasts, going to different conferences. You hear it, but we're still in that mindset. Well, it's never going to happen to me. I'm going to be the exception to the rule. They're going to renew my policy. Everything's going to be okay. Well, most people now aren't getting their renewals until 1 to 2 weeks before the renewal date. When you get to find out, oh my gosh, it's doubled in price, or 30 days before your renewal, you get the dreaded letter in the mail that we're going to have to non-renew you, then you start scrambling. You're not giving yourself enough time to prepare to get yourself a decent quote. I would be proactive with it. The best advice I can give, once you get about 3 months from your date, start shopping. I mean, if you wait to see if you're going to get the and most agents don't even know, the agent is not the insurance company. So they don't know that you're going to be non-renewed 3 or 4 months out. I mean, anything can happen. You could file a claim in the next month or two, and that could make a difference, you being 3 months out. So the agents really don't know until it comes down from the insurance company, which as soon as the agent knows, the client typically finds out about it. So they find out about these things pretty quickly. Give yourself time. What's really changed, I would even say over the past 2 years, a lot of insurance companies are becoming regionalized. I'm only going to write in the Northeast. I'm only going to write in Texas and Pennsylvania. I'm only going to write in the Midwest. So it's really getting crazy. So used to, old school, you could go through Philadelphia, Nationwide, Church Mutual, McKee Risk. You had a big group that wrote nationally. Now, the only company I know of in the US that writes nationally is Nationwide. Everybody else has kind of gone to regional or is pulling the reins back and not wanting to grow the child care book, maybe still renew it, but are not taking on anymore. So again, that shrinks the options. Philadelphia is a prime example. People are starting to see a lot of non-renewals for. Back in July, Church Mutual had come through and decided as of July 1st of 24, we will no longer take on new child care accounts. Now, all the people that were with them, they are still renewing those accounts. So that's a good thing. They're not just completely leaving the marketplace, but again, less options for new people, new owners coming into childcare, opening up a second center. You've got insurance carriers like Markel, great company. Once you go from that third center to the fourth, you're too big for them. They won't offer 4 schools, 3 maxes you out. So there are some little nuances with people that are still there. And what I've been seeing with them specifically.
Okay, I have a question. Hang on
Okay.
a minute. I got a question.
Okay.
So is there anything advocates, people who are in the industry can do, I don't know, to have conversations with these insurance companies? Or is this just completely like, who gets to try to get them all back? Or should we all be sending cookies to Nationwide and make sure that they stay on our side? Because
right.
Nationwide is on your side. Sorry.
It's not right. But it's not that Nationwide is going to be the only one. I do think over the next 1 to 2 years, we're going to start to get some comeback. But you can, I mean, I see this on the news here where I'm at from a homeowner standpoint. Let's just take childcare out of the mix. They're doing interviews with TDI, with lawmakers on what's the problem. People's homeowners are going up 100, 200, 300%. Most people are escrowed in here in Texas that I've come across, and that's affecting these people's house payment by $400, $500, $600, $800 a month that they can't afford. So it's not just childcare that's really seeing the pinch of this. I think it's everybody on a personal level. But I've talked to a couple of insurance companies, and I'm one of those people. You can tell me something, but if you tell me it pertains to me, I'm going to go back and check. Just out of curiosity, I want to know. So one of the things we started talking about is, and I hate this because everything always seems to go back to COVID. But when kind of everything shut down, the problem was, so the insurance companies have to file their rates with the state. You can go up so much, down so much. You have to play with whatever the state's filed and what you're allowed within that. So our issue became, the world kind of pushed the pause button.
I guess it pushed the pause button on Blake.
Okay, Carrie, you still there?
Hang on,
Oh,
Blake.
I got you now.
When you said the world pushed the pause button and you froze.
Literally, yes. I was like, hello, did y'all leave?
I was thinking,
Everybody's kind
wow,
of just...
how did Blake do that? Okay, go ahead, Blake. So the world pressed the pause button, and so did you. But in the meantime, you said
But
something,
no,
I'm sure.
so year over year, for as long as I can remember, even with my own auto insurance, home insurance, it goes up a little bit each year. Not enough to make me have a panic attack. But what a lot of them, while the insurance company said happened, them in the States quit talking. Well, two things happened with that. We didn't take that little 5 to 6% increase because they didn't refile rates. And from a real estate standpoint, even Texas, which has typically been very cheap to live, we took a boom. I mean, these what were $200,000, $250,000 houses were now $500,000 and $600,000 houses over a 2-year span. Well, so think about this: all these insurance companies are insuring 250,000. Everything's burning down, blows down, whatever the case may be. It doesn't cost 250,000 to replace it. Cost of construction's going up. Cost of labor's going up. Same thing on the car side. So they went about 3 years. And I went back and checked because I was curious. My homeowners and my auto stayed pretty spot on from about right when COVID hit for about 3 years. Then all of a sudden, when it started skyrocketing, everybody started freaking out. But if you think about it, if we're all trained to take that 6 to 7% increase, not that much money, but all of a sudden now we're fixing to take all 25 or 40% at one time, everybody presses the panic button. And I think that's part of what happened. We took the big increase at once. We found that a lot of clients that I was talking to and meeting with, they were like, yeah, my building's worth $1 million. I'm like, great. In 2003, when you bought it, it was. Today, it's more like 1.8. So you're very underinsured on that property side. So now, yes, rates have gone up, but then limits have had to go up too to catch up to what real-time market is. And that was just put the big skyrocket on pricing.
So a lot of people, even if their rates have been going up, because their property values are going up too, they're getting a double whammy. So it's now you're not just going up on your little 1,000,000 square foot or your $1 million building. You now have a replacement value of, what would you say, 1.8. So, all right. So right there, it would have doubled anyway. In basic,
pretty much. Yeah. So a couple of the insurance companies that have left Texas specifically, they went across their entire child care book, and their loss ratio was over 140%. So put that in simple terms, every $1 million they took in premium, they were paying out 1.4 million in the child care space, whether that be from property, auto, or liability, because a lot of states are getting very litigious and the courts are awarding a lot larger sums of money in lawsuits today than what was 10 years ago. 10 years ago, what was 100,000 is probably more the $500,000 mark today.
So,
okay, it's kind of a problem.
Let's just say that the child care centers actually take action. They actually listen to this podcast or any of the conferences that they've been to, or, they've just had a conversation with their own agent. And so they actually get started ahead of time. So they actually start this process 3 months ahead of time. What are some things that they can do or that they should be pulling together, could help them maybe make the process easier, might be able to keep their rates down? Any red flags related to some of those, just what they need to pull together?
Yeah, so one thing that I know before Church Mutual stopped on the new side, we're seeing it more through Nationwide now and a couple of the other insurance companies. Now, when it comes to the abuse and molestation coverage in childcare, they're starting to require upfront each school's policy and procedures manual to see how they break out their abuse procedures. Depending on how well that policy and procedures manual is put together and what type of wording is used, and zero tolerance better be all over that. qualifies you to how much you specifically, your school qualifies for abuse coverage. So it's not just everybody gets the $1 million anymore. If you don't have a very well put together policy and procedure manual, you may only qualify for $100,000 of that particular type of coverage. So that's been something different. And that's really been a bigger push over the last 6 to 7 months that I've been seeing. The last 10, 15 years, nobody's ever asked for a child care owner's policy and procedures manual. Now it's becoming common conversation. And even on top of that, some companies, if you're wanting to have an umbrella to sit over your other lines of coverage, specifically on the abuse side, you have to have a very well put together policy and procedures manual to qualify for that. So that's some of the bigger changes I've seen, but that's something I would definitely take a look at internally, is that policy and procedures manual. And you would be amazed. Everybody knows it's a hot topic. That's where we're susceptible to the biggest lawsuits. But I would almost care to bet 50% of the centers out there, they think it's in their handbook. They think it's in that policy and procedures manual. But when you really dig in and start reading them, it doesn't make the mention of the words abuse, whether it be physical, sexual. It's not there. You assume it's there because we talk about it all the time at the centers. We know, but it's not in writing. And that was even surprising to me, because I mean, you guys go to conferences, we see each other all the time. It seems like something always comes up into those terms, or, hey, did you hear about this that happened, or that, or it's on the news. It's just normal in this industry.
It's a required annual training, I think, in every state. I mean, but obviously what we're missing are the directors and owners. And we know this. I mean, obviously it wouldn't, if it wasn't a problem, you wouldn't be telling us this, but you know, sometimes directors and owners, especially directors and owners who have a passion for the industry, and they started this and they didn't necessarily buy a franchise. They don't necessarily love details or the business aspect of it. And, you know, they know they're supposed to have an SOP, you know, they know they're supposed to have a notebook. They might have an employee handbook-ish. So it sounds like, you know, Carrie and I have another podcast coming that'll probably be all over the 95 reasons you need to have an SOP. And, you know, I'll be like, it's all Blake's fault. And so, yeah, so I mean, we know this.
I mean,
you know.
And if you're thinking about growing, because you've heard that a lot of centers are for sale and you wanted to grow and get a second center, you have to have the standard operating procedures before you take on that additional center, because you're not going to be able to be there all the time. When you have one school, if you're the owner or you're part of the leadership team, you can have, you know, the owner or director who have been trained, who have lived this in the building most of the time. You get a second school, who's going to run it? You can't be in both places at the same time, or, you know, to use the Texas phrase, you can't ride two horses at one time. You got to pick one. And so that's where that standard operating procedure really comes in. That where those policies come in is that this is what the policy is. If there's a kid who's displaying any of the red flags for child maltreatment, these are the 27 steps we're going to do.
Well, and also we need to make sure it's in our employee handbooks. We need to make sure that we're doing everything. And one of the things about writing it down is you also have to follow it. And with everybody,
that doesn't sound right.
Not just the employees you like or don't like, or, you know, if just because that person might be your favorite teacher, if there's been an accusation, it's a zero tolerance, right? Like, boop. And so, yeah, I think that I've made myself notes. So, okay, Blake, I've got my policy and procedure. I'm coming to you. I'm 3 months ahead of time. I get the unfavorable letter. am I totally screwed? Like, what do I do?
You're not. And a lot of it's going to depend on what's the reasoning behind the letter. Is it due to high claim volume? You just had a couple of very large claims hit. Is it this company is just getting out of the child care market space? So two complete different reasons to be non-renewed. The high claim side, don't panic. The world's not going to come to an end. A lot of people start thinking that immediately. Oh my God, I've heard the rumors. It's going to cost me $100,000 for insurance, and I've only been paying $15,000 forever. That's not the case. Now, depending on what some of the reasons for the claims are, it could be a situation in a short term where you may have to sacrifice some of that abuse and molestation coverage. The $1 million may not be there, but you may still be able to get 100,000. No, your premium's not going to go down to 10 grand. I mean, it's still going to go up some, but it's not going to be at the point to where it's just killing you. I mean, there's still ways to go. The best advice I can give is find an insurance agent that understands childcare. If it's your local neighborhood, whoever down the street that writes general contractors, writes this, writes that, writes a little bit of everything, they probably don't know the different places to go to get the coverage that you need. So they're going to wind up telling you at the last minute, we've tried everything, we just couldn't get you covered. I've had so many people, by the time they hear about who I am, they contact me, they haven't had insurance in a week. And then I can't do anything in 2 days. So you're probably going to go another 2, 3, 4 weeks without it to get a quote. But find a specialized child care insurance agent. And there's probably, I'm not saying by far, I'm not the only one out there. There's probably 7 or 8 of us throughout the country.
I only knew of 5. So, okay. Because I was like going, I know of roughly 5 that I've seen, maybe 6.
And the funny part is, out of the 5, most of them are probably within a 30-mile drive in Dallas.
Well, yes. And I know that at least, and a lot of you have a history.
Yes.
I was going to say related.
Pretty much.
Yep. But the rest of the country can still use us great folks here in Texas, even if there is a y'all thrown in there every once in a while. So, all right. Well, Blake, thank you so much for reminding and making sure that people really understand the importance of policies and procedures, employee handbooks, and why what you do matters and what you write down matters. I love that. Love it, love it, love it. So thank you so much for joining us today. Carrie, do you have anything you want to ask Blake before?
If somebody was, and I know we said we weren't going down this rabbit hole, but I can't help myself. So if somebody was going to open a program, what is one thing you would tell them to keep in mind as they're building that out, other than the handbooks, right? What is one thing if somebody's starting their first center or going from a in-home program to a licensed program?
So the first thing that the insurance company is going to ask me as the agent, I need to see the resume for who the director is. Do they have experience? Did we just go from an IT company to childcare sound like a great investment? Now we're going to go run this.
So this is of the director, not the owner.
Correct.
Okay.
Who's going to be running? So make sure we have a very good director. Their experience will depend on if you qualify for certain companies. Wow. A lot of companies now, until you've been in business for 3 years, won't even talk to you. So that's harder to get in. You're not going to be able to get with, you probably have a 50% chance less of options. Not saying that you just can't get it, because that's by far not the case. If you want to come into this industry, this business, you can do it. Make sure you yourself have experience as a assistant director, some sort of managerial role in this. If not, be prepared to pay one to bring in, because you're going to need them.
Okay, that's excellent. That's very, very helpful. Because it's, what is one thing I can do to make this a little bit less of a crisis that they didn't see coming.
Well, I think it actually answers the question, because a lot of times we get folks who come through our program, Blake, who are owners who are going to like ask for waivers, and they're going to try to figure out how they can not hire a director, even though they maybe not really have the experience. Public school teachers are a good example, right? They want to come into early childcare, but they don't really meet the time and care questions or requirements. And so they try to kind of wiggle around it and really just want to be able to do it themselves. And I think this is a great reason for us to know, to say, hey, you can, but if you hire a director who's good and you include their resume when you go to get your insurance, that's actually going to be a better bet for you. So
and I would tell people in that situation, if you hire a director that's good, they know what they're doing, they have experience. Once you start going down the road and you can get into those nationwide, the big known insurance companies, the first thing they look at is your licensing deficiencies. If you have an experienced director that knows what they're doing, that's going to be a lot cleaner than if it's somebody fixing to learn trial and error. We're going to have a whole lot more deficiencies, and probably a lot of them weighted more that medium high than the low end side that can happen. And that has been affecting a lot of people with insurance, is licensing.
Yeah, we had a client in Amarillo that I am about, I don't know, 97% convinced that the reason they had the deficiencies was because of that actual scenario. They got rid of all of their leadership and then brought in all brand new leadership, and then we got hit with a bunch of deficiencies. So, and then they saw their insurance just, go from 10 to 25, and they're a nonprofit with 2 locations. So,
yep,
absolutely. So, all right, Carrie, it's your turn.
It's my turn. Is it my turn to wrap up and say,
yep,
if you enjoyed the show, share it with people who need to know what we said.
Yep.
And please go in and write reviews. We really have been not doing a great job at getting people to write reviews. That's on us. We're trying to fix that. So please help us fix our own problem and go in and write a review. And we will talk to you next week.
Thank you for listening to Childcare Conversations with Kate and Carrie. Want to learn more? Check out our website at texasdirector.org. And if you've learned anything today, leave us a comment below and share the show.